Welcome to StockMarketPending.com. We have elected to update the general public for the second time this year. And today's date is June 1, year 210. And basically, this is going to be probably a 3 or 4 series special. And what it's going to do is it's going to tell you what we know. And 2009 is, we called the bottom within 10 days of 2009. That was back in February. And this table up here that you're looking at, by the way, StockMarketPending.com, you can call us today at 702-685-0772. Or stay tuned to SMF Eye on the Economy show on Saturdays in the morning. Go to the Stock Talk radio show up there. We're going to be doing lots of headline specials around economic indicators and how you, as a consumer, and you, as a victim to the stimuluses that have happened since that 2008 low up to current, to the top of this reversal, is that what has always happened in many decades, you can go back even 15 to 150 years ago, is that it's unfortunate that the public has never really quite got the right education. Why? Well, think about it. If you did have the right education, then you would know what to do and how to profit and what these markets are about and what economies are about. And part of what's on that table, as I'm giving an introductory number one, is that we're going to be talking about the global indexes. Sorry about the interruption, but we're going to be talking about the global indexes. We're going to be talking about the percentages of the moves that they made, the 2008 close, the 2009 close, the percent change, pointing to change, 2009 low, percent change to low, 2009 high. And forgive me if I break your eardrum. Sometimes I get excited about these numbers, so bear with me, and I hope I don't offend you, by the way. Percent change to the high, then you got the range. Now, when I built SMF MMT trading platform, it was all done on a mathematical range. Our system, 20 years of back testing, what market makers do in exchanges is that SMF really is very broad based in its actual diversification model. And our very diversification model is with markets, consumers, economies, worldwide distribution and events, and how it all plays together. And what has happened is that I don't believe the public ever really got the right education, because I don't think so. Because I don't see how anyone is going to let the market drop against them unless they were led to believe something else that persuaded their decision process at the time. And who knows what, they're supposed to be able to count on the financial services industry. You can't count on them. You can't count on what you hear from them. There's a lot of things you can't count on. You've been misled for too long. And the thing about being misleaded is that there's got to be a point in time in your life where you don't want to be that way anymore. When it's relative to this and the mechanics of the U.S. markets and global markets, it doesn't matter what exchange. SMF is very diversified in all capital trading markets worldwide. That's what we do. And the actual core asset and component is everything that I was talking about. Maybe the public has really never been educated the right way. There is a good way and a bad way. And there are good beliefs, there are bad beliefs. Maybe there's good myths, maybe there's bad myths of what the public was led to believe. But in all of these numbers right here is that these are all the raw data of the mathematical movement and what the SMF MMTP platform does is it dissects and makes markets. Like right now, here's a market being made in Google. Okay, 488.63 by 488.78. 66 was the last sell, but there's a market that's going to be made in here, and today it was right above 480 to 490. That's $10 up. Doesn't matter. That's where the buyer, the seller, the market maker, and all the operational exchanges were on one cylinder at the time. And we help you get these kinds of moves mathematically, and they're great in volatility, by the way. But nonetheless, let's get back to our original goal here on what we started, and that is those numbers. Welcome back to stockmarketpunding.com. We had a lot of trade issues and things to deal with, so we put this tape on hold for a while, and now we're back. And what I was saying here was about the global indexes and the moves that they made. Now the US markets, on the other hand, kind of trailed along there. And basically what we're going to be doing here is a special on worldwide market collapses over the next year. And you're going to want to stay tuned with stockmarketpunding.com. So we've got all the highs, we've got all the mathematical ranges and things that I talked about earlier on the tape is that our platform has a very unique mathematical interpretation, and it works. And part of our numbers is to take a look at what the 2008 yearly change was. This is what the 2000 yearly 2000